switches go. Welcome to the angle. Let's start the show. Hold on tight, the stage is set. Dig in deep with no regrets. Red and green bars leading the way. Welcome to the angle. No time to delay. Markets rise and markets fall. Atomcash is ready to answer the call. While the bulls charge hard and the bears dig deep, the angle will keep you on your feet. Hold on tight, the stage is set. Dig in deep with no regrets. Red and green bars leading the way. Welcome to the angle, no time to delay. Cashing in on the highs and lows where the wind of fortune constantly blows. No looking back, keep your eyes on the prize. Fuel the run with a fire that never dies. Hold on tight, the stage is set. Dig in deep with no regrets. Red and green bars leading the way. Welcome to the angle, no time to delay.
Good morning, everyone, and welcome to the Atomcash Angle, the show that flips the switch and floods the system with straight financial voltage. I'm Adam Cash, and I'm bringing you the firepower that your financial life may have been missing. Now, whether you are new to trading or a trading savant, I aim to turn complexity into clarity with a shot of adrenaline. Now, today we have an exhilarating lineup of segments for you all to give you as much information as quickly as possible. Now, normally what we'd like to do is some live trading and some market analysis right here at the open. We typically do that from now until around 9:45-ish, and I was scheduled to do an Adam's Asset Assault where I break down about 10 stocks really quickly, give you TA, all that jazz. However, because of what happened yesterday, I'm going to do a little special here specifically on Jerome Powell, the Fed, cutting rates and their impact on the stock market, and if Trump can actually fire him, because that was a big thing yesterday in the market, in the news, etc. A lot of drama with that, so I figured we'll do a little special on that, because I know there are a lot of questions. I'm seeing a lot of people confused on social media and whatnot, so I thought it'd be a better use of our time, and then maybe we'll roll in some of that Adam's Asset Assault into tomorrow, and that way you guys aren't being gypped, but I'm giving you a little something extra. So that's what I got on the docket for you guys today. It is a beautiful day here. It is sunny. It is warm, a little too warm, but it's okay. It's a beautiful summer day, and we are one day away from OPEX with a very, very, very interesting week ahead of us. And before we get too deep into it, let's get into our Catalyst Watch for the day. We already had jobless claims come in pretty muted. It was actually like a decent beat, with retail sales being a decent beat. But outside of that, for the rest of the day, we have a Fed speaker, three Fed speakers, I misspoke, during market hours, and then a White House press briefing at 1 o'clock. So obviously you want to keep an eye on that, because as we saw yesterday, words get said, the market goes like this, and you may have to react. So be mindful of that. Obviously tomorrow's OPEX, we're going to talk about that a little later in the day. And one of my favorite catalysts to play on OPEX, at least this week, is going to be Michigan sentiment tomorrow at 10 o'clock. So Lots of cool stuff still coming down the pike for this week. Now, before we get into the market open, let's look at the market and where we're sitting this week, because I know you guys might have missed me Monday, Tuesday, Wednesday, but I figured we change things up a little bit because I like to do the early in the week streams. This week we'll do it late in the week and kind of see how you guys feel, walk you through the end of the week. Looking at the SPY this week, super interesting. We're actually like consolidating at the highs. I was mentioning in our Discord community over at Exclusive Trading that we basically respected the 8 EMA with the exception of yesterday where we had that gnarly wick down, but we closed higher than the open on the day on higher volume. So actually a pretty solid reversal candle intraday. I also said, because I did a stream in our Discord community yesterday to our members, at the open yesterday, there really wasn't any opportunity. It was kind of like, it was pretty in the middle for bulls and bears. It was bulls had $2 to the upside, bears had $2 to the downside. And until either level was going to be breached, there really wasn't a good opportunity either which way. It doesn't matter if you're bullish or bearish. The risk was just poor. But yesterday, we actually saw a nice little decent dip off of the Powell drama, and then a nice rally to close at the highs of the day, looking very liquidity sweepy now. Hindsight being 2020, right, intraday. Kind of like a big old inverse head and shoulder. This is the 5-minute chart for yesterday. So it's actually looking like we could have a decent move into this Friday OPEX, which is what I'm most interested in, especially with this daily candle and looking like we're going to open pretty flat to a little baby gap up, which is just fine with me. So it's looking like we might have a nice little push and maybe even close at all-time highs into OPEX tomorrow, depending how today goes. Take that into consideration. Looking at the Qs, yesterday we tapped a new all-time high, got rejected. I'm sorry, 2 days ago, tapped a new all-time high, got rejected. Similar price action to SPY, similar price action yesterday. And looking at IWM had the worst day 2 days ago. It got hammered. But if you've been watching the show, you know how important this like cluster area is between that 217 and 219.34. That's your golden pocket, which you saw a clear clear support there, and that LOI right in the middle, roughly at 218.52. So a nice cluster of support there. Basically closed on the daily 8 EMA on higher volume. It's looking pretty good for small caps, assuming we close today above yesterday's close. That's important. So I'll say that one more time. Small caps are looking pretty good if we close above yesterday's close. Negum says, wow, Pepsi added at 129 after your stream a few weeks ago. Yeah, they had decent earnings. Full transparency, I did close out my calls. I think I made 30% before earnings, so I was out of that position. I still have some long equity in my main account, but in my smaller account, I also closed it out to move some money around. So Pepsi it did pretty good. If you guys don't know, we talked about it on the stream here. We timed the lows pretty solid. I got my entry. I got a few entries. I got my first entry was around 131.50, then got in somewhere around here like 129ish. Now trading at 143, which is basically my fourth price target up here, 143.38. Might hit some resistance up here at 146ish. You got the 200 MA there and your 0.382 retracement, so just be mindful of that if long, and depending on what you're doing, stock, options, whatever. So just be mindful of that if you're interested in Pepsi. Looking at our sectors real quick. Yesterday, pretty mixed bag, but again, we had a lot of drama yesterday, so we want to look at our sectors right before the market open here, and mostly everything is green for the most part, with the exception of healthcare and comm services are the ones that are dragging down the market right now. A little red on materials, but nothing too crazy, and it's nice to see, I want to say, an even spread, right? What my bet is for the market getting to 700 essentially is more breathtaking a role here. Having tech cool a little bit, but letting the other sectors like catch up, so to speak, right? And that's kind of what I'm looking at here. I want to see a lot of these other sectors start to play out a little bit, and that's why I look at IWM as that real clear catalyst to kind of get an idea of sentiment going forward. Not intraday, but I mean like a little bit longer term, like medium term, next month or two. How IWM's performing will kind of give us more of a feel, not only for retail traders, but also gives us a feel for general sentiment in the market, and that's why I like to use IWM. Today, also, we're going to keep an eye on these three stocks. Big retail stocks, because we're not doing Adam's Asset Assault today, but I figured we keep an eye on it. SoundHound, Joby, and Oscar. I'm sure if you're watching right now, I'm not sure. I'm sure if you're watching right now, you probably heard of these names, because I've talked about SoundHound on this program. If you watched, I think I've also talked about Oscar on this program as well. But these are the three names I'm watching today. I had a big conversation yesterday in our community about how high retail traded names or I should say very active retail trading names heading into this OPEX could be very prime for a hard push either which way, mainly because of how the OI and some of these chains look. And I want to use Soundhound as a prime example. And full disclosure, I am long a bunch of different call options on Soundhound and a bunch of different equity positions at different prices, which all of them I think are green with the exception of runners. I have $12 runners from last week that are, I mean, they're at the money, so whatever. But anyway, notice how the OI is pretty stacked on here. And I even made a tweet about this if you follow me on X. OI on here is pretty stacked all the way up to 15, and it's a little thinner on the put side, but also kind of stacked as well. Had a whole conversation about delta hedging. When the market makers, as price moves, market makers have to delta hedge, so they have to adjust for the risk of these calls and puts going in and out of the money. Consequently, price action reacts. They have to buy the underlying shares, market makers, because if someone wants to exercise said calls, they have to deliver those shares. And same thing with the puts, right? So they have to hedge appropriately, and that can push up or drive down price either which way, right? So when we see a high OI, in this case, I mean, these 10s are probably fried on Soundhound, and I'm a bull, so I'm a little biased. But breaking 12 today, 1190 was my trigger, which we broke it in pre-market. Breaking 12 today, it's going to push 24,000, almost 25,000 calls that were carried over into the money, and it's going to push out 8,000 puts. So you could see a violent push on Soundhound today, and continuing. If we go over 13, you're going to hedge out a few puts, but nothing crazy, but you're going to put another 20,000 calls in the money. And if we get all the way to 15, if there's just momentum and FOMO, you're going to break 15, and you could tap out, peter out around like 15 to 17. Sounds crazy, I know, but this is a pretty clean gamma ramp that you could see also on here with the declining put side OI as well. So it's also backed up by the fact that I like the chart a lot, and I'm bullish on it. So if I'm bullish on it, it's obviously going to work out. I'm joking, but it's something to keep on your radar today. If you don't have exposure, don't FOMO in, don't be an insane person. But with the correct risk, you may want to consider, if you haven't already, a Soundhound position, in my opinion. Now, the opposite case of that is Joby. Joby has been a rocket to Russia, and I'm actually looking for a short position on Joby right now. Now, Joby has been moving up very violently. Now, keep in mind, when we're buying options, IV, especially on a sharp move like this on Joby, is very high. So it's going to be pretty juiced. Now, a similar story here, where notice how right now we're opening around, or we may open around like mid-16s. No puts really, right? However, decent amount of calls. So this is not one I want to front run by any means, but it is something I want to keep on my watch list, because if it starts to fail, like the 16 area, ooh, my voice cracked, that was awful. 16 area, it sounds like a 16-year-old, my voice cracking. If it starts to fail that 16 area, a lot of these puts could start going in the money, and consequently a lot of these calls will also get hedged as well. So I'm actually looking for Joby today. I have the 15 puts and the 16 puts on watch, and I'm putting on the watch list for the Atomcash angle today because I might actually take that trade live with you guys. Kind of depends on price action. Now, to be clear, this is not something I want to front run. Let me say that again. This can keep pushing here. It's got the if we're just looking solely on OI, it's got the OI that it could keep pushing and might have to keep hedging for it. There's no competition on the put side, so this could have more legs to it and go up to 17, 18, but if the volume on this one looks exhaustive in the first 5 to 15 minutes, I may want to take a stab on it. If it shows any sort of weakness, obviously managed risk on that, as I think this could be a decent short opportunity depending how the open goes. Now, if it drops right at the open or whatever, I'm not going to want to touch it, but depending how the open goes, I want to see it actually push higher and a higher volume before I consider a short on Joby. And Oscar's another name that I'm long right now. Over this 15 area, it could look pretty good. I already realized some profits on Oscar, but I think it could head up to 16 might get pinned at around 16.5 this by tomorrow. So these are three highly traded retail names I'm keeping a watch on for you guys today in the show. Market's open. I didn't get to give you guys my spiel, but the spiel is, if you like the show, please do me a quick favor, like, subscribe, share, all that good jazz. It helps me very much. I have a little bit smaller audience than normal today, so if you guys could do me a quick favor before you get too deep into trading, drop a like, a share, subscribe, all that fun jazz. It helps me greatly. Thank you very much. And let's get into the day. All right, SPY's opening up basically flat, kind of like I alluded here at pre-market. Want to watch this 626.28 to the upside there, and 626.87. So these are old all-time highs. These are key levels to watch as we move into the day. In fact, 627.86 is the all-time high on the market, so we're not terribly far away. That realistically could get snapped as soon as today. So we want to keep an eye on that, obviously. Going to keep a tight eye on Joby because, like I said to you guys, if we get pretty good volume here, first 5 to 15 minutes, I'm going to exercise a short on this. If I miss it, I miss it. It's okay, but I want to have a good managed risk here. Oh, look at Soundhound right out the gate. 1244 and pushing right out the gate. I said yesterday, I'll put it up on Twitter later, if it breaks 1190 is going to be an explosive move on Soundhound. Hold on, let me gloat in our community real quick because I've been babysitting this chart and I'm very bullish on it. But as it breaks this 1190, this has legs. And as these calls go in the money, I'm telling you, this will move hard. Do not FOMO. I know I sound excited. I'm already exposed. So I'm already in, right? But as this pushes, and especially after it goes over 12.5, which is where it's at right now, this heavily favors the bulls over the bears solely from a delta hedging standpoint. So you have to understand market makers. You have to understand how market makers prepare for an OPEX. Options expiration is Friday. So as you push these puts out of the money, they're going to get rid of their collateral. And as you push these calls in the money, they're going to have to buy the underlying in case these calls get exercised. And that's where you get these violent, like, retail short squeezes. On top of this name shorted at least 10%. I forgot. I'll look it up later. But you get these very violent moves on stocks like Soundhound when you have all these things combined together. It makes for a powder keg, and the powder keg goes boom. It just needs a spark. Let's keep an eye on Joby because this is where I'm really, really interested, like I said, in a potential short opportunity. That 5-minute volume so far, that's what we want to keep an eye on. I want to see the open volume, like I said, first 5, 10, 15 minutes. Obviously, these options, if you are interested in a Joby put or call, whatever, they're going to be wild. Your IV percentile is 110, and currently these are trading, at least at the money, at 180. So you're paying a 70% premium, at least at market open, that can change, for a Joby option right now, which is very high. So I would rather, it may seem like you're late to the party, but some of these options actually might get cheaper, even though the stock isn't really like going anywhere, or even if it goes against the play, whatever. They might get cheaper just because the IV is going to drop so sharply. So it kind of depends on what's happening. So definitely want to keep an eye on this. Market's totally flat, so I guess we'll keep talking about these fun retail names because it's not doing too much today. And like I said before, guys, you want to stick around. At 9:45, 10 o'clock, we're going to do a little segment on JPOW, on the Federal Reserve, on what's going to happen if we get a bunch of Fed cuts, etc. Really good educational segment. I got it all drawn up and everything. You're going to want to stick around for that. That way you're at least prepared for what could happen, both in the market and outside the market. So keep an eye on that. If you are long, or if you're interested in a long on Soundhound, watch this 1265 for confirmation. That's an LOI I have on my chart, which is going to push you over 12.5. Obviously, breaking that should actually increase. We should see an increase of volume if that 1265 does break on Soundhound. And again, over 1250, that's kind of the area. So 1250, 1265, that's what you want to watch if you're long on Soundhound, breaking that, and you're gonna fly. I'm just saying. Joby kind of muted. I was expecting a little bit more of like a violent pop to the upside, like a little bit more follow through, more retail FOMO. I mean, look at this daily chart. This thing has been parabolic and now kind of chilling out here, which makes me interested in a short as well, even if it just kind of sits here. But I want to give it a little bit more time just to see if it peters out or not. So we'll keep a tight eye on that. And if you are watching Oscar, you're going to want to be above about 15 bucks. So we're just shy beneath that right now. You're going to want this to hold about 15. So this is a low where you want to hold here if you're a bull. Look at the market real quick. And it looks like it's not worth talking about the market. Pretty flat. Nothing cool going on there. Q's sitting on this old LOI 55763. I guess I shouldn't say old, but sitting on this LOI at 55763. And IWM pushing out the gate. Look at IWM. What a beaut. Like I said, that daily candle yesterday was solid. Now, this is the level. I've said it on this program so many times. I say it almost every single day in our Discord community. 223.32. Put it on your chart. Over this, Rocket fuel. Under this, be a little careful, but this is such an important level. Put it on your chart, okay? You can also use a support resistance level, whatever you want. This is very, very, very important. Do not have that on your, or do not be caught not having it on your chart. Double negative. There we go. Let me just triple check that we don't have any news coming up here on the open. If you're exposed to crypto, there might be a House vote on stablecoins today, so just be conscientious of that if you have any crypto exposure. And we do have a Fed speaker at 10, so keep that in the back of your mind. Yeah, very, very, very interested in IWM. Remember I said IWM's a good sentiment driver? If bulls push this level today, these retail stocks are going. All right, Joby's getting a little action here. Like I said, I don't want to front run this at all. But when it makes sense to take a stab, I'm going to want to take a stab. Those 15 puts are pretty cheap, though. 20 cents. Now, they do expire tomorrow. Let's see. Let's get some Greeks on these. So those 15 puts have 17-cent delta. Meaning, if you get a $1 move, they basically are, if you get a $15 fill, you're going to be up 100% real quick, which is very attractive. Obviously, the theta is very high. Gamma 13 as well. And obviously, very, very high IV. It's a good opportunity, but you got to wait. Because you don't want to be the guy stepping in front of a, picking up pennies in front of a steamroller. Because it could just steamroll. So we will keep an eye on it for now. Yeah, it's interesting for sure. Don't sleep on that. That could be a really solid opportunity either today or tomorrow. Volume's a little low for it though. Like all things considered, which could be a bearish thing also. I'm debating maybe I'll get a few now and then keep an eye on it. I'm sure you guys would like a live trade, wouldn't you? Would that be fun, guys? You want to do some live trading? What do you think? Might be a good time, maybe. Might be a good time. I'm debating, that's why I'm quiet. Just watching very closely. I grabbed a very tiny position. I don't really want to say it. But if you've been watching, you have an idea. But I like very tiny. So I'll keep an eye on that. Alright, fine. Maybe I'll say it. We'll wait and see. I might add more. We'll see. If you're watching, you have an idea of what I was looking at. Oscar falling down a little bit here. Let's take a look at our VIX. Not much going on there. Pretty flat. VVIX pretty flat as well. UVXY down a little bit. It's looking like it's going to be a quiet... Hold on. Knock on wood. For now, looks like it's going to be a quiet day on the market, at least judging by this open. With the exception of IWM. IWM is just cooking with gas and fire. All right. I'll say it, but don't be dumb. Now, obviously, you're watching this, so you probably know. But I did grab some 15 puts on Joby. I added some 15 and 20 for what it's worth. And again, small position, nothing crazy, but I am in. I guess I should officially alert that. It's risky. It is very risky. Please keep that in mind. I have a 17 average for what it's worth. So we'll see how that plays out. We will see how that plays out. But we'll come back to that. We'll keep taking a peek at the rest of the market here. Let's look at our segments, or sectors, I should say, and see how the market's performing here at the open. Sorry for the low energy there for a minute. I was just very focused, debating with myself how much I should, what I should do and how much I should do. Utilities getting a nice little rally here at the open, up 0.5%, and just kind of really pushing here. Solid move on utilities. Energy down a little bit, but showing some signs of recovery, and consumer staples up as well. This is probably spurred on, like we talked about earlier, Pepsi had pretty solid earnings, so obviously a consumer staple. That's positive in general. Anytime we see a consumer staple perform pretty well, it does wear on the other staples in a sense, because especially in this environment where we're all terrified of tariffs and whatever, that's the kind of thing the market's going to look for anytime there's a pretty decent ER with a consumer staple. The market likes that. XLK getting a nice little move here. Tech is up above the open, which is looking solid. Real estate, nothing much to write home about. Materials at the highs and pushing the highs. Industrials, really solid day so far, 0.8%. Healthcare, the laggard, almost down a full percent today, which could be attributed to, I believe Abbott was reporting earnings. It's not something I have exposure in, so forgive me if I seem a little naive. Let me double check. Yeah, Abbott was reporting earnings today, so I'm going to speculate that they had said something on their call or something like that. We can check that in a moment. Finance is pushing nice and clean. Consumer discretionary looking pretty good, and comm services pretty flat. So it's looking to shape up like a bull day so far. Looking pretty shaping up for that. Joby getting a little bit of a push here. Like I said, it does favor the bulls more than anything. Above essentially 17, there's no really put resistance here. So unless there's some spooking or some profit taking, like I said, very risky trade. We'll see how it pans out. Soundhound right at that 12.5. This is what I'm very, very excited about. This is my favorite chart in the market right now for like a short-term trade and even a longer-term trade. I will keep talking about it. I love the setup. I really, really like this chart. I think it's a solid setup. I think it's got solid catalyst. It's got a little bit of short interest. It's got volume. It's got a good options chain. It's got everything I look for in a trade and an investment from where I'm long at, which is roughly around like mid nines I have shares at. So I'm pretty happy. Let's see it continue. Oscar is rejecting pretty hard. So this is the inverse. So we talked about that delta hedging before. This is the opposite, right? So look at Oscar. That OI at that 14 level, big. 34,000 puts parked down there. And 15, that's why I said 15 was kind of important, because that's kind of like your flex point here. Decent call and put exposure there. And it doesn't, that's why if I was a bull, and that's why I am a little bit more bullish on Oscar than bearish, I'd want to see it get to 16.5, because I think that's where the pin would be for the week if we see some bullish action come through. But sub 15, it is looking bearish, mainly just from a market maker standpoint, how they have to prepare the positions. But if it gets some level of reversal, recovers 15, because it's still near the open, it could still recover and push those highs. Soundhound having a very clear resistance there, again, between that 12.15 and that 12.65. SPY getting a nice push here at the pre-market high. You're going to want to keep a tight eye on this. We saw a tech rally, and you're seeing the Qs react as well. Still sub their pre-market high. And make sure you set an alarm, set an alert, set whatever you need to set for that IWM level at 223.32. Now, don't get things mixed up. Don't get them confused. Just because I have a short on Joby right now does not make me bearish on the market, right? And also, because this is so far out the money and because of where the Greeks are sitting, this could get back to 16.33 on a sharp candle or something, and these puts could jump to 20, 30 cents really quickly, depending on how quickly we get there in 5e expands, etc. So it's possible. These are the things I want to keep a tight eye on. Do not sleep on this IWM level. SPY just broke the pre-market high. We're looking, knock on wood, we're looking like we're going to have a pretty clean day. NVIDIA's showing good signs of recovery here. basically sitting at the all-time high, about 40 cents off. Those last 3 days, you see these bottoming tails here. If I zoom in, that's showing you that price action's pushing up higher. So it's showing us that buyers are more interested at pushing the price higher. People are still buying shares of Nvidia even at all-time highs. As the price drops, people are bidding it up. Microsoft just made another new all-time high, 509.15 for Microsoft. Okay, quick lesson here. Look at Joby. It's now 15 cents, or we're getting fills at 15 cents, and the stock is higher. How does that happen? If you were around for GameStop, right? I remember this because I did this myself personally. I grabbed some puts, and it was like a stupid position. I was just playing around with the IV, and I grabbed puts, and GameStop went up like $50 or something, and I bought the puts for like whatever, it was $10, $20, whatever it was. And the puts went up 300% or whatever in value, even though GameStop rocketed to the upside. It's because the IV went from like 100 to like 700%. So even if you're wrong directionally, if you're expecting IV to climb, obviously it's better if it goes in your favor, you could still make money. So these are the things you want to consider when you're looking at, especially like this, if you're looking at kind of a parabolic move here, grabbing a short position, these are things you can consider as part of your risk potential. That's why I pick a little bit out the money with decent Greeks, all things considered. And you can, I don't know if you can see it on my chart here. I don't think it pops up on the stream. It does not. That IV has now increased. It was about 170 when I got in. It's now 205. So doesn't mean it's dead, even though I'm directionally incorrect right now. Okay, IWM is now consolidating at this new point of control that we just made today so far at the high of day. 222.95. We are shaping up for a very, 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 very interesting day. Very interesting day. Yeah, Oscar Bulls, you need to recover 15 today. It ain't looking too clean, especially if you break 14.5. It might get fried. It might get fried. Let's go back and look at the rest of our Mag 6 so far. Google sitting on that LOI right here at 180.65. Now, full transparency, I did actually close out my Google long. So I was long down here around like 162-ish. I closed out my Google long. I don't think necessarily it's bearish or anything, but I had a decent like $20, $25, $30 run for whatever from my entry. We have earnings coming up as well, so realizing some gains, letting it be. But I also am not like a big proponent of investing in mega caps. I don't have a lot of fun doing that. That's just me. And I like keeping things interesting. So taking the play where it makes sense, that was kind of what it was and went on. And if it goes back down, I'll play it again. That's the best part about being a trader. Looking at Apple now, currently sitting at 210.19. It's kind of boring, but you kind of have a cup and handly shape working out here. It's a little bit long of a base here, but here's your top, cup, and a little baby handle here. Red star here. MACD's going against you. Decent momentum. Very iffy. Could go either way. Looking at the daily chart, the weekly's definitely indecisive. Monthly leans more bullish than bearish, I would say. But we still have 2 more weeks in the month, so keep that or take that with a grain of salt. Amazon kind of just chilling up here around that 222, 224 area that we've talked about on the program before. I'm not too bearish or bullish on Amazon. It's just kind of I don't want to touch it at all. And you guys know how I feel about Tesla. I actually shorted Tesla intraday twice yesterday and made nothing crazy. It was like 9 and 18%, something like that. Definitely a vehicle, at least at this point in time, to intraday trade. Now, if you want to be a bull, watch this 320.74 area. So that's your 0.382 retracement here. You also have the POC here. So staying above this with your MACD flipping decent volume yesterday could spell a reversal in sentiment for Tesla. And again, I'm not necessarily bullish on Tesla until it's over 360, but at least near-term bullishness could come into the stock, assuming we can hold this level. Be mindful, you do have earnings coming up in next Wednesday, so 4 or 5 trading days. So you want to definitely keep that on your radar if you are a Tesla investor. Okay, look back at the market. SPY pushing the highs here, getting close to that first LOI at 626.28. Q's comparatively weaker. than the SPY, and there's your strength. Look at where IWM rejected. To the penny, the exception of this next candle that just formed, 223.32. To the penny. Next candle went 1 penny higher. 223.33. Clean, clear area of high importance. In this case, it is resistance. We are underneath it. So expect a rejection here. What I would look for is to hold the POC. Now I'm saying if I'm a bull, hold the POC here. So roughly around this 222.80 area, consolidate, push again and break it. And I wouldn't be super bullish on the IWM until we crack over this next LOI at 224.17. But this is a good start. Hard rally of the day. Tapped it. I would never expect it to break on the first tap, especially with what this level means. But consolidating a bit, cooling off, letting some profit taking come through, let some new bulls come through, break it and go. That's what I want to see on IWM. All right, those Joby puts are back around 15 again, rejecting those highs there. For a downside trigger on Joby, it's a little hard to call simply because of the fact that we, again, are just simply like parabolic to the upside. I would like to watch that close of the day. 1633, yesterday's close. As a level in which, especially if I was a bear, or I'm sorry, if I was a bull and I'm thinking about like, oh, where do I want to put my risk? It's where I want to put my risk. If I'm a bull on Joby, I want to say, if 1633 breaks, which we saw it break at the open and you see this level recovered, if that breaks there, I might want to get out of the way. That's what I'm looking for here. So we'll keep an eye on that level and see if that plays out to the downside. Now, if that does play out to the downside, I mean, imagine if this gap fills today all the way to 14 bucks. It's literally 14 on the nose too. The high of that candle is 14. Typically, when you get a gap up, and another, I think it was technically a gap up, right? What was the high? 1648, open 60. Yeah, another gap up technically. When you get like 3 gap ups in a row and you fill that previous gap, which we already technically did, but if there's follow through, that other gap, so I'm talking about daily charts, and especially with how this volume's looking, like pretty parabolic with the exception of today, that other gap tends to fill. So a $15 put, and this is why I said it's balanced risk here. It's risky, but they could go in the money, it could go to 14, and intrinsically speaking, each one's worth at least $1 or $100. So even 15-20 cent average, talking about a 400 or 500% gain. Good risk to reward, all things considered. Will it happen? To be seen. But this is the first level I would watch for that confirmation to the downside. All right, SPY is getting near that LOI up here at 626.28. Q still pushing. And IWM didn't even come down that much. You got your second test right here on this current candle. Few pennies shy at 0.3 on the high of this candle. So we'll keep a tight eye on this because this is what I'm watching for the bulls to get some strength here on our small caps. Look at Soundhound getting really, making like a nice little base here. If bulls step in, like I said, 1250 through 1265. That's going to be a resistance area. Breaking that, this goes, legitimately, this could head to 15 by the end of the week. I know that sounds crazy and I don't like to pump things or whatever. And thankfully, I don't think I can pump a $5 billion company with the 42 viewers I have at this moment. But it realistically could tap 15. I know it sounds a little nutty, but it could. Especially with this daily SAR that you have just chilling up here at 1320, right around that point where we rejected before. Like everything lines up with this chart. If it gets the juice, it's going. I don't know if I could be any more apparently bullish. All right, Oscar bulls are trying to step in at the 1450 here, so we'll see if they have any juice in their lungs. Does that make any sense? Juice in their lungs? Sure. But overall, looking like an okay bull day so far. I do want to keep a tight eye on IWM here, as I've been saying ad nauseum. And guys, stick around. In about 5 minutes, we're going to do that JPAL segment for you guys. So if you're interested in that, make sure you hang around. That way you can understand the risks to the Federal Reserve, theoretically. And you want to be prepared. You're going to want to pay attention. So stay tuned for that. Ooh, Rivian got a nice pop today, too. Just looking at my other holdings here. Rivian up about 4%. Again, another small medium cap. So that's looking pretty solid. Did I share that one? Hey, us 42 are huge whales. Watch it, says Eddie. Yeah, you're right, man. I don't know. Maybe the SEC is going to investigate me. Oh, that's funny. I don't know if I shared this one on the program, but Grab. So I open Leaps on Grab. This is a very good looking chart for a multitude of reasons. Now there's earnings coming up on the 30th, but it is actually right now it's breaking this downtrend here. I'm gonna zoom in on the weekly. You've got this downtrend. If you want to draw this on your own charts, you can, from 1122, tapped one time on 221, tapped again on 66, and now we're tapping and breaking it on the weekly here. Full transparency, I opened 5.5 call Leaps, and I also have shares. Ooh, that looks gnarly. Let's get rid of that. Whoop. So the opportunity here, just so you're aware, bigger company. This is like an Asian, a food delivery company in Asia. If this cracks 552 to 552 to, I'm sorry, I got to look at my levels here. 552 to 591. So basically, this point between 5 and 6 is a very it's a support, or sorry, it's a resistance level. If it can break through it, though, this, and you can see on my chart my price targets, this thing's, I'm gonna bet, gonna go to $10 with like pretty high degree of confidence. High volume here. It's got a little bit of a retail following, which I like to get in on those kinds of names when they're at a level that makes sense. Decent update today, especially if the IWM pops and holds a pop. This is a name I'm very, very, very interested in. So keep an eye on Grab if you like that. Go back to the market here. SPY rejected a few shekels short of that LOI at 626.28, about 8 cents lower. Q still pushing here. IWM pretty clean rejection there on that second tap, now coming down. So as a bull, I want it to hold above 222.94, which we're under right now. So getting some semblance of a reversal here sooner than later. Otherwise, you're more than likely coming back this 222.46. There's a little baby area of consolidation here. Before going higher, you also have your VWAP down there too, so wouldn't shock me to tap that. Look at Soundhound, 1250. I'm gonna keep saying it. This 1250 to 1265, you have to watch. If it breaks, it will go. I will say it again. If it breaks, it will go. Joby pushing the highs a day. It's looking a little toppy though. Those puts are now $11, so I am under on those puts. But the good thing is, it's not a 0 DT. I've got all day, which is nice little freedom. It's nice to have the flexibility of time when you need it. Okay. Cool. Sorry, I was just checking something real quick. So let's see if the bulls step in on IWM right here on the 21 EMA. Q sitting at highs. Let's see where the strength is in the Qs. Oh, wow. NVIDIA. Hello. Bing bong. New high a day on NVIDIA. This thing has no stop. It has no quit. You know what's going to happen? I said this, Dad, if you're watching, hi. I said this to my dad because he loves NVIDIA. I said NVIDIA is going to hit 200 before the end of fall. Or I said the beginning of fall. I think I was saying like September, October. I think you're going to see NVIDIA hit 200. Pretty certain. Now, we're going to head into earnings here coming up on the 27th of August. Especially if we keep grinding up like this. People are going to go, it can't keep going higher. It won't keep going higher. And then it's going to go higher. Told you guys, if you've been watching the program, over that 141.36, it's bullish. You don't want to short this. If you're intraday trading, different conversation. But longer term, you don't want to short it. It's a death sentence. Microsoft, another new all-time high. Google lagging, Apple lagging, Amazon lagging. So the strength in tech really is just Microsoft and NVIDIA. And we've seen NVIDIA act like Atlas and put the market on its back and hold it up with both hands. So it's not shocking to see, but comparatively, it's only up 1%. So it's not like it's up massively, but it is up 1%, which for a now $4 trillion market cap, pretty solid. Pretty solid. All right, so I guess we will roll into this next segment. I kind of want to see because I'm feeling like it's going to fire down here pretty soon. Volume's not really there at the highs here. It's looking toppy. I'm talking about Joby now. Use this 17 level as a trigger, but like I said, there isn't really much. Actually, we should look at the volume. Like I said, there's no OI carried over, but I wonder what the volume is on these chains. 8? Wow. No one buying puts, huh? Only 93 $18 puts. 4 people bought the $19 puts. The $17 puts, there's 401 volume, whereas yesterday I only had 59 open interest, so a little bit more exposure there. 744 volume on the 16.5 puts. 1,000 volume on the 16 puts. 2,000 volume on the 15.5 puts, roughly. And my strike that I picked, 3,500 volume on the 15 puts plus 5,000 OI. So if we do get that pull down, like I said, this is going to 14 today. This breaks 1633, especially if it breaks low a day, it's going to 14. Put a stake in it, rewind the clip if it happens. I'll put it on X and I'll say, ta-da. Granted, didn't have the best entry, but I believe. I believe. It's good risk to reward. That's always what every trade should be. You want to always have good risk to reward. I'm risking $15, $20 a contract to make north of $100 a contract. It's pretty good risk to reward. I'd take that bet. 5 to 1. Yup. Sounds good. SPY sitting here looking kind of double toppy. A little bit of a recovery here in IWM. We're going to wait just a minute or two to do this the JPOW segment because it's looking like we could get a move here. Look at Qs. It's looking like the market might try to push here. So that's why I want to at least talk you guys through it if that is going to happen. And guys, if you haven't already, I already kind of quickly asked you at the beginning of the stream, but do me a quick favor. Please go ahead and like the stream wherever you are on YouTube, Instagram, or X. Like it, write a quick comment, retweet it, share it out. Every little bit of interaction helps. I only ask you guys once or twice a stream. That's about it. Type a comment, say hi to me in the chat. I'll say hi back. But any little bit of interaction greatly helps me in the algorithm. I'm a very, very, very small fish. And if you appreciate and you like the content you're seeing here and you want me to keep doing it, that's all I'm asking for you. And also, I will remind you, once we hit 500 subscribers over on the YouTube channel, I will do this every single day. Every day for you guys, with the exception of holidays and days I just don't feel like it, but mostly every single day. So when we hit 500 subscribers on YouTube, we're going to do that. So if that's something you have an interest in, you want to see more of the show, if you aren't already, go over to YouTube and subscribe. If you don't have a YouTube account, what are you doing? Go make one. And you probably all have Gmails, so it would take you no effort. So go subscribe. Thanks. Cheap plug is in. Okay. Thanks, Negan. Looking at IWM here, still sitting at the highs. I want to wait another minute because it's looking like we could get a pop here, and I want to talk you guys through it if we do get a pop. It's iffy. We could get a pop here. If it rejects, then we'll go right into the next section because you're basically at like a triple top on IWM, but this is a very important level. As for SPY, basically a double top underneath an important level. The Qs are showing much more relative strength. So these are the kind of days I love to trade because when all three indexes are basically going the same direction, that it makes it so much easier that the wind is at your back with everything. Doesn't really matter. That in combination with a red VIX, whether you're looking UVXY or VIX, that's my golden setup, right? The market is, all three markets are bullish and they're all pointing the same way. There's not really a, what's the word I'm looking for? Not discrepancy. Divergence. There's no divergence between the indexes. Plus volatility is decaying. That's what you want to see if you're a bull. Those are my favorite days because those days are the cleanest days to trade in my opinion. And it looks like we could have that right now. All three indexes are toppy at a key level, or at least IWM and SPY are at a key level. And the Qs have room here to another 80 cents before we hit another key level. So I would be looking for right now to see if the Qs break this high and push on volume. If that happens, that could be enough sentiment, right, to push the IWM to break that level and push SPY to break that level. So that's what I'm going to be watching for here very closely. Very, very closely. Not looking like it's going to happen for now. Soundhound back at 1250. Wicked a little higher too. This is looking good. Tapped a high, made a new low. Back tested the same high essentially. Higher low. Made a lower high. Made the exact same low, or technically a higher low. Now you made a higher high. So now this is more indicative, especially if volume steps in here on Soundhound, that it's going to break that resistance. MACD starting to curl up. You've cooled off. You had a big push from the open. You built a base, right? So it wasn't like a big push and then we just went to the sky. We pushed up, built a base. Now you're ready to go again. Joby's kind of a reverse case where you sold off at the open, you rallied, and now you're trying to build a base, but you're building a lot of wicks up here. Like, you're getting hard rejections at the highs. So this is, in my opinion, looking more distributive and then looking more like we're going to get a lowercase n. That is the chart form I'm looking at. If I'm predicting the future, what we're going to see here on Joby. The lowercase n play out. Oscar Bulls are going to try to defend that 14.5. If that 14.5 fails today, it's not going to look good into OPEX. If you're a bull on Oscar, it's not going to look good into OPEX. You're probably going sub 14, even 13. And I don't necessarily want to be bearish on this name, because I do kind of like it. Yeah, down here. If it gets, so I will say this, if it does get to this 1320, 1267 area, where I have my next two key supports, that's where I'd want to consider a new long, because I no longer have exposure in Oscar. That's where I'd want to consider some equity. You're also going to fill this gap here from 5.6, so it really wouldn't be the worst thing if that did happen. I do have some $15 calls that I opened yesterday, and I, to be clear, took profit on, so I'm not like sweating it too much. They're fine. Even if they went to zero, I still made money. So I'd prefer if we reversed, but if we don't, and if I'm being realistic with myself, we're under 14.5, you're probably going to get that pull down to the downside. Alrighty. I'm going to go ahead and bet that while I'm doing this segment, we're going to see something fun happen. Come on. Oh, I want to do my spiel, but we're looking like any second now. Even if we got a hard rejection, I'd feel better because that way I can go about my business. I don't have to stare at the charts. But it's looking like it's going to get exciting here any second now. Any minute now. It's looking like it's going to get fun. I promise. The market's looking okay. It's looking like it's going to get fun here in a minute. That's why I'm kind of just waiting around and waiting to see what we get. Any minute now. But I really would like to move on with my life. IWM again. The high of this candle, 22.30, a few cents shy of that key LOI. MACD is looking like it could reverse here. RSI is cooled, but still very bullish at 66. Can the small caps do it right now? Look at Soundhound, 1260, 1259, 1260. Man, if this breaks and Soundhound goes at the same time, we're moving. Look at Soundhound, 8 cents there. Tapping the key LOI at 1265. IWM breaking that level right now. Watch your volume here and watch follow through. So I need to see follow through with like 2 to 3 minutes here for a continuation. That's a break. Let's see if we can confirm the break. Soundhound is at that key LOI. Look at that volume. That's exactly what I was looking for. I said if you break 1250 and you get to this level, you will see a volume increase, and that's what you're seeing right here outside of the open, highest volume essentially. Now, if there's follow through here, this is going to go. Same thing with IWM. We need to see follow through here. So the next 2 to 3 minutes, it could backtest. So we get a tiny little pop, hover here, then go. That's also okay. SPY's at high a day right now. So I guess in this scenario, what I'd want to see for additional confirmation or confluence is getting over the 626.28 on SPY. Lets me know that, you know, all of our we're all pointing the same direction and looking pretty good. Q's didn't even break out on that. Q's is actually just consolidating here and could actually even reject here momentarily. Come on, Russell. Small caps. 1 minute close above that key LOI. Decent volume. Engulfing volume, in fact. Can we push even higher? And on that IWM break, Joby not really reacting. However, my Soundhound is, if it can hold on and push here, because we're over that key level of 1250 and we're at this next key level of 1265. 1371 is my next level. And like I said, this is more than likely going to end the week at 15. Very, very confident. If it can go like now. Very confident. SPY just kind of hovering. Q is looking like it needs to cool. And the Russell does not care. It is going. Russell is going right now. Wow. Wow, wow, wow. Certain things look very good. Decent. Come on. All right, we'll come back to it. I'll have a surprise to look at. How's that? We'll just keep it on SPY while I talk. Because if I don't do it, it's not going to happen. So if I don't do it now, it's just not going to happen. I don't want to carry it over to tomorrow. But now Joby's going down. Come on, guys. One of you's playing a prank on me. One of you knows I'm trying to do this segment, and you are, like Eddie said earlier, the 42 people we're watching are huge whales. You guys are trying to pump the market right now. You're manipulating the market because you don't want me to talk about J-Pow. You don't want me to talk about Jerome Powell and Trump and the drama. You don't want to hear it, so you're just going to pump all your money into the stock market just so I can't talk about it. That's criminal. Disgusting. Oh, man. This is a fun day, though. Like, this is looking like it's going to be a really fun day. Solid, fun day to trade. Yeah, we're going. Man, if I nail the Soundhound Bull and the Joby short, chef kiss. If Joby goes to 14, Soundhound goes to 15, I'm just going to be ecstatic by the end of the day. It's going to be a chef kiss. The only thing missing from the retail call, the little retail basket call, is Oscar going to, like I said, I think if it can get back over 15, I think this wants to get pinned at 16.5 by the end of the week. So far, it's not showing a lot of good stuff, to be fair. But maybe it can catch some support from a bullish IWM. Oh, come on, Soundhound. Keep going. What a beaut. All right, let's get into it. I'm never going to get anything done. All right. Give me 1 second, guys. Let me just pull this up. So essentially, well, actually, I'll save that. I'm going to record this, so you guys want to rewatch it, you can. But I'll talk about what the goal of this segment is in a second. All right, ready? Let's hit record and let's roll. So there's currently a lot of drama out there right now with Trump and with Jerome Powell and what he can or can't do and what would really happen. Now, we all know that Powell is the Fed chair. We know Trump is the president. And we know that Trump has been saying a few things lately to kind of indicate that he may want to remove him from power if he can, right? So we're going to talk about in this video if he can, what scenario he can do it, and then ultimately the effect, meaning not necessarily the effect of him being removed, but the effect in the case of if interest rates are cut too quickly. And what I mean by that is, assuming the reason why Trump wants to remove Powell is due to the fact that he's not cutting rates fast enough, which he said publicly on his Truth Social account, he would implement someone who may cut 1 whole percentage point right away, right? And that's drastic, don't get me wrong. But I want to talk about what can happen in the scenario if rates are cut too quickly. So if Trump does get rid of Powell and puts in someone else, which is going to be someone who would want to cut rates quicker, I'm assuming, because that's who Trump would appoint, theoretically, that would align with his viewpoints, what the effect on the economy and the market could be. So real quick, let's start with, can Trump even do that? Can Trump remove Jerome Powell? Well, there's only 3 technical ways that a Fed chair can be removed. And the way the Fed's designed is intentionally like our branches of government, to have separation of powers, right? We don't necessarily want one person having full control over different arms of the government because that makes it ungovernable, or it makes it a tyranny, right? Some sort of dictatorship. So there are 3 scenarios in which a Fed chair is removed or changed. First one, the obvious one, the term expires. So if their term expires, they're no longer part of the board, they're no longer the Fed chair. Simple. Fed Chair Jerome Powell's term expires in May 2026, so it's not even that long of a wait. And at that point in time, Trump can nominate someone else too. But that may not be quick enough. So the second reason why you could have a new Fed chair is if they die or resign. Which can roll into being pressured by the president or pressured by other political party members to tell them to resign. That's the obvious second option. The third option, the most controversial option, is called removal for cause. Now, technically, the Fed chair can be removed by the president for cause, meaning the president would have to cite one of three reasons of the cause being either misconduct, dereliction of duty, or ethical or legal violations. So that can be spun any which way you'd want it to spin if you were someone who was trying to get rid of Powell and if you didn't agree with what he was doing, whatever, right? Now, this technicality has actually never been used in the history of the United States government. And to be very clear, policy disagreements in general, so if Trump says lower it by 1% and Powell says no, that's dumb, that disagreement is not grounds for removal. So, in the same reason why you could get fired from your job by having some ancillary reason like that you shouldn't be fired for, race, creed, religion, if you're pregnant, whatever, those are reasons you shouldn't be fired from your job. But let's just say you didn't mop the floor right or something. They can go, you didn't mop the floor right. That's why I'm firing you. Even though it really is those other reasons they can't legally fire you for, they're going to find reason to fire you for that. And that is where Trump can actually legally remove Powell. Now, again, to reiterate, no Fed chair in the history of the United States government has ever been forcibly removed. So doing this, because it's such a gray area, could spark a huge crisis, constitutionally speaking, over the Fed's independence versus the other branches of government, right? That is a fantastical, horrible thing in general if you're a trader, because that is the top tier of uncertainty, right? Anytime markets are uncertain, we don't like that. It makes it very hard to trade, and people get a little scared. Having Powell removed for any reason, right, could spook the market either which way, which is a very scary thing to think about because we don't know what happens and what could happen and what the bang-on effect is for other companies and the economy as a whole. Speaking about the economy, now let's just pretend that does happen. Now, and we'll ignore the fact that let's say it happens, and then let's pretend the market does nothing. Let's pretend there's no effect on the economy immediately, right? What would happen then if Trump actually institutes a new Fed chair, and let's play with the thought that the new Fed chair wants to cut rates immediately at 1%, because Trump has said the Fed's too high, cut rates immediately, should cut it by a whole percent, etc. And those could be dramatized, of course, but in the event that an aggressive cut, and to be very clear for those who don't know, a cut is typically about 25 basis points each month when they were in a rising or falling rate environment, typically 25 cents, sometimes 50 basis points. So 100 would be a big deal very quickly, especially when we've gone from a raising rate environment to basically stagnation where we're not raising or dropping, nothing's happening. A quick drop could spark a few different catalysts, and I have them all here for you right now. What you want to watch out for the very first thing is a sharp drop in interest rates could actually reignite inflation. So think of it this way. If there are rapid rate cuts, it could increase liquidity in general, which increases borrowing. Which can boost demand way too quickly, right? Because the whole point of the Fed is to balance supply and demand, essentially. So if inflation hasn't been fully tamed yet, which the CPI report is hinting we're kind of trying to get there, that can reignite price pressure and consequently undo the previous progress on reducing inflation. So if we cut rates too aggressively while CPI is relatively elevated, it could actually really destabilize consumer expectations, which could then push inflation even higher. Now, the bang-on effect of that is we could actually weaken the currency. So for you as an investor, if you have money in the stock market, that might be great because equity is going to do this. The dollar goes down, people look at equity as an opportunity or at least a hedge for against inflation and a bunch of other reasons why you'd move to equity with a lower dollar or weaker dollar. Which is what would happen to the market. The market should theoretically go up. It's the same reason why when the Fed starts to cut rates, we see a big pop in the market. But it's also the same reason why, what I'm going to talk about here momentarily, the same reason why we see eventually a bear market happen after that in the near future. And if you don't believe me, feel free to look it up. So these lower interest rates could reduce the demand for currency, theoretically. As a result, that can lead to a weaker demand for the US dollar, which could actually increase the cost of imports, which would ultimately fuel inflation through higher input prices. So not only do we have the tariff drama, but then a weaker currency could really mess up the economy from that point of view, if that makes sense. Now, these two things that I previously alluded to can cause a bubble. So we could see markets interpret fast cuts essentially as a green light to go super ultra risk on. Like all the way. Stocks, crypto, real estate, everything. And that can cause a massive asset bubble a la 2008, a la the dot-com bubble, right? Because risk and reward are completely mismatched, right? And we talked about the Fed's importance as balancing supply and demand. So when there's that mismatch, speculation increases wildly. A lot of meme stocks, story stocks, junk bonds thrive theoretically because these companies that have a hard time surviving have now an easier time surviving. Borrowing money's cheaper. So these companies that can come out of the woodwork, like a Nikola, right? Like even a scam company, right? Can sell you a story and they can borrow money easier from an investment firm or something like that because money's cheaper to borrow. So yeah, come to me. I'm a venture capitalist, and oh yeah, money. It's the interest rate's so much lower now. Yeah, I have $5 billion, whatever. So because of that understanding of risk being so much lower because money just happens to be cheaper, that can cause overestimation of risk assets. So we get a big bubble, and eventually bubbles, what do? They burst. So you can ride the wave, right? But the other thing you want to think about is how long to ride the wave for, obviously. Let's pretend the SPY is trading at $500 right now. And let's pretend interest rates are dropped by 1%, theoretically, right? And you put, we'll say 1%. You put all your money in that $500 SPY. And SPY goes from $500 to $1,000. And at the same time, interest rates are dropping. Well, inflation's going up. So if you can't outrun inflation, even though you made 100% gain on your money, again, in theory, if you can't outrun inflation, this is a big example. If you can't outrun that inflation via equity, then you might even just break even. So yes, on paper, you may see that you made a 100% gain on SPY from $500 to $1,000. But if inflation's rising just as aggressively, all you did was break even because your buying power, right? What your dollar can do for you essentially stays the same, which doesn't you no good. Now it's better than losing money with sitting in the bank and getting rusted by inflation. But these are the things you want to keep in mind as you potentially enter this risk environment. Lastly, I have two more things here. There could be financial instability. So banks, how they make their money, or what a big portion of how they make their money, they rely on interest income to make their money. So net interest margin, essentially. So if rates drop too quickly, then their profit margins, what are they going to do? They're going to shrink. Right? Because the way that they set the rates up, they leave a little headroom there. So if the prime rate right now is 4.5%, a mortgage right now is 7%, the bank makes the difference of the 4.5 to 7, theoretically, right? Or whatever other ancillary percentages and fees, whatever that are in there. They're pricing it higher so they can make a profit, obviously. So if banks are holding longer term assets like bonds and the rate drops too aggressively, this could really pinch banks pretty hard. So in extreme circumstances, you could see some credit tightening or bank runs if the confidence in the market in general is shaking. Which, again, that's an extreme case. That's like Great Depression kind of thing. I don't think that's going to happen. Let me make that abundantly clear. But it doesn't excuse it from the possibility of it happening if rates drop too quickly, to be very clear. Lastly, and I think this is actually the most important part, the loss of credibility. So this is something that isn't tangible, so to speak, but if the Fed cuts rates too quickly and they have to raise them later, it doesn't look like it is strategic, I guess you could say, but it looks more reactive. So essentially, markets would stop believing the forward guidance from the Fed or Fed projections, and consequently, I want to say they could kind of ignore it, right? Which could, again, makes the risk to reward completely out of whack, which causes more volatility in their policy, which can make businesses ultimately more hesitant to invest or hire. There are very few scenarios, I would argue, where a quote unquote fast cut could be quantifiably acceptable, and that would be in like a severe economic scenario. I guess you could say like a financial crisis. If there's a super huge major deflationary threat, or unemployment rises dramatically a la COVID, right? Something happens dramatically. If the credit market freeze or like geopolitical emergencies would warrant a fast cut, because those are the scenarios that there is a justification for said action to occur. When there isn't a justification and you just want to cut by 1% wildly, everything I just said prior more than likely is going to be what's going to happen. So these are the things you want to keep in mind if you are watching the market and if you're watching the drama that's going on right now between Powell and Trump. And if something does happen, at least now you're prepared to know what would happen if the market did cut rates, or I should say if the Fed cut rates very aggressively, and how it could affect the market and, more importantly, your wallet personally. Make sure to like, subscribe. Cool. All right. That was it. Moving on. Joby's at 20. Let's go. Trading at 1667. We're not at my trigger level yet at 1633, but those puts are now up, or marginally up. I have an average of 17 cents, so we got a little baby gain there. Soundhound back testing that this isn't bad, so I want to make this abundantly clear. Like, it's better if it holds this 1265, but remember how strong of a resistance that 1250 to 1265 area is. So breaking on the first go with some good volume, it's okay. Coming down and back testing it, now you want to see it power through and make a new high. If it doesn't power through and make a new high, so it doesn't break over this 1278, then it more than likely is going to get pinned here or under here for the rest of the day. Looking at the market right now, bulls did not follow through on IWM, unfortunately. Negum says, shush, I made $300 on Adam's IWM resistance support. Hell yeah, man. Happy to hear it, man. So looking like we're going to sit around here. Like I said, there's a stronger chance that we're revisiting this tiny little consolidation area here. So like 222.37, which 20 cents away, so it actually could start reversing here. Qs are actually looking more bullish now just as I click on it. MACD flipping, looking like a cool-off, back-tested VWAP, moving up at the POC, broke the SAR. Looking pretty good on the Qs. SPY looking a little bit more bearish, but I'm only going to assume that's because of how IWM is faring. So both IWM and the Qs rejected at the same time, so obviously going to have more of a bang-on effect on SPY, which essentially had a 1, 2, 3, 4, 5, 6, 7 top-ish up here at the high of day, just underneath that support level, or I'm sorry, that resistance level. So keep this number on your chart, 626.28. That's the big level to watch if you're a SPY bull today. Breaking that and market, well, I mean, not say it goes boom, because you have this, you want to look at this for confirmation. Another key level here at 626.87. Probably going to go up. In fact, I'll put my money where my mouth is. I'm not going to grab zeros. I'm going to grab ones. We're at 625. Probably look at the 626s. I'll go closer to the money. Okay, I grabbed some of the 626s for tomorrow at 165. I may add a few more on that, but nothing crazy. I added a few more at 162. Or, sorry, 162 and 163, technically. But we'll just say 165 so no one can say that I cheated or lied or whatever. So watch VO up here. Watch this red star break. More than likely heading back to the highs. I'm pretty bullish on the day as a whole. Come on, Soundhound. I'll hang around here for a few more minutes, guys. If you have any questions in the chat, feel free to let me know. Or if you have a chart or ticker request, if you want me to take a peek at it real quick. We actually did that in the in our Discord community yesterday. We actually had a good time. We had a few people drop some tickers. Went over them real quick. So if there's a name you want me to take a peek at, feel free to drop it in the chat. Maybe I'll look at one or two before I leave you to your own devices here today. Microsoft chilling near the high a day, looking pretty solid. Google looking good now. Man, Apple. If Apple can get its head out of its own butt, market might be pretty happy. Amazon lagging today too. I wouldn't touch Tesla today specifically unless you're scalping. With how it's sitting, unless you're scalping or I'll say unless you're scalping or it breaks high a day. Otherwise, I wouldn't touch Tesla. Me personally. You do you. Me personally, wouldn't touch it. Soundhound at that key level. Red SAR here as well. Red SAR is on that LOI at 1265 right now. Brandon says TTD. Brandon, let me know. You looking short term, long term? What are you thinking? Day trade, swing trade, equity? Let me know. I'll take a peek. IW, I'm trying to turn around here. I should really add those spy calls up here, I guess, so you guys can watch them. Let me add to the watch list. Or how do I do that? Add to watch list. There. So now you guys can see it at the top. We're trading at 180 now. Ta-da! Nice little break here on SPY. I'll probably take my first trim at this POC here. Swing trade on TTD. All right, we'll take a peek. The trade desk. This one had a bad earnings at one time, right? Yeah, I remember this. It like gapped down a stupid amount of money. Traded down to 42. Reversed back up. Interesting. Interesting. Let's see. I don't hate it. I'm assuming when you say swing, you're looking to be a bull. Good volume on the week. Don't love that gap a few days ago. What level is this? 85.18. Let's put a line there. So what I would say actually with this one, if you want to hedge your bets, this is one of those scenarios where I'd rather show up late to the party than to the wrong house, as I like to say. SPY inclusion news came out? Okay. In this scenario specifically, I mean, look at where it rejected. So that old gap is at 85.18. So that old, I believe that was an ER gap, right? Yep. So that old ER gap, 85.18 is the high. As I just said, I'd rather be late to the party than show up to the wrong house. So I would rather wait for the bulls to break this 85.18. Could even run higher to like 90.27 than backtest. That's when I'd be interested in a long. Or if volume breaks very high and we close above it the same day, then I'm interested in a long at that point. You do have the 200 MA here on the daily, currently sitting at 92.21. So that 90.27 and 92.21 area might be a little tricky for you. The weekly's not bad though. I think if you want to hedge your bets carefully, you do one of two things. You wait for that area to confirm, or you wait to back test basically the golden pocket, 78.17, or roughly the AEMA on the daily. So either way on this trade specifically, I don't hate it as a bull trade, but I would wait for either scenario. So I'd either wait to break above 85.18 and then backtest it and go, or I'd wait for it to cool off, come back down, and even potentially fill the gap, depending on how volume looks and everything, or hold the AEMA before considering long. Those are the two scenarios I'd look at for this name. So either way, I prefer the long side of this trade, but I would wait either which way. Because right now you could be taking an early stab and it works out. Or you could be taking an early stab and you overpaid. So depending on the time you're looking at too, so like whatever contracts are, in terms of like if you're buying like 90 days out or 180, whatever you're doing, factor that in. If you want exposure, because like I said, I think either scenario is very likely that you come down or you go up and backtest. You could consider maybe half size or quarter size or getting like a starter position. That way, if it takes off, you're in. But if it goes lower, then way you can always scale in at the same time too, and you don't have your full exposure there. That would be how I'd personally look at this one if you're looking to swing trade. Conservatively, I'd look at a stop around like this, 75.43. So it's not bad. I don't hate it. If you want to be uber safe, equity, obviously. But obviously you got this big, nice little gap to fill here. It's looking juicy. But you got the 200 MA there, a little bit of resistance. So I would buy more time than less, me personally. That's what I would start with. Buy more time than less. And either wait for either scenario or get a starter and then when either scenario breaks, either size up, well, I mean, average up or average down, but size up on either scenario break, and then go from there, move stops, etc. So that would be what I would personally do in that case, Brandon. Hopefully that helps. All right, those SPY calls are sitting at 184. Not too shabby. So I guess I should trim some while I'm on the program. That way you guys can't say I gypped you out of anything. So I took some off here. I was about 10% gain. Nothing too crazy. And then I'll give you a quick update on Joby before I go. Awesome, thank you. You're welcome, brother. I'll give you a quick update on Joby before I go, because obviously I alerted that here on the program, so that way you guys at least know what to look for. You're not in the dark if you did consider this position. The only level that I care about is 1633. 1633 breaks and then low a day, theoretically. This moves aggressively to the downside, in my opinion. Like, aggressively. Really no other level to watch. I think it's going to... I genuinely think it's going to 14, if that level goes. 1633. If you want to look at another key level, you'd look at the open from yesterday. So I'll put a line there too. 1495. Because it is an open after a gap, so that could be a little pit stop there too. And then if you want to be like super like careful, you can look at the low of that candle as well, which I'm not too worried about, but that's 1443. We'll mark it out anyway. To be super careful for you. There. So to reiterate the trade thesis here, 1633, breaking that. I should go to the 5-minute. Breaking 1633. Look at this too. Green SAR and the 200 MA. We break that green SAR, we break through the 200 MA. It's going to get bearish, I promise you. It doesn't come without risk, right? I'm technically green. I have like roughly a 17 average, so yay. But it's not without risk. But the reward here could be substantial. Now, breaking that green SAR, breaking that 200 MA, breaking that 1633, there's nothing to say this wouldn't nosedive lower, in my opinion. Those levels you want to watch, 1495. So if you want to be conservative, these would be your take profit points. 1495, 1443, and then finally 14 bucks. This is a $15 call. Currently, the delta on this call is 15 cents. So take Gamma and Vega completely out of the equation, because that's how I conservatively calculate. And some people may say it's silly, but that's how I like to calculate, because it makes it very conservative. If I take Gamma out, so I'm assuming, and I take Vega out, so I'm minimizing the volatility impact, which would only depreciate how much I could make theoretically. So it's a more way to conservatively just take an estimate, because I'm also assuming Delta doesn't appreciate as I move more in the money, which it will, but I'm assuming it's not, to have a very conservative viewpoint, right? So if that happens, and if Delta does not appreciate, and we drop $1, and we get to 1571, these contracts go to 100%. They go to about 30 cents. And that's the most conservative evaluation, solely based on the delta sitting right now, the delta not appreciating, IV not increasing, which on a drop it probably will. Like nothing, no Vega, no Gamma, just strict delta with no appreciation. That is the most conservative viewpoint I can give you. If that happens, and it comes down to at least, like I said, a buck lower, you're going to have 100% gain on your hands, assuming nothing else happens. So, again, good risk to reward here. I'm not saying bet the house on it. I'm just saying it's a solid risk to reward. It's backed up by how the chain is sitting right now. And if this level goes and we're in earshot, it's looking pretty good. So keep that in mind. You guys know to watch on SoundHound as well, which don't love this. Rejected the LOI. It might get pinned here today, which is unfortunate because it was looking like a solid open. What I'd look for now your 5 minutes turning a little sour as well. So look at this 5-minute POC here. Watch that 1246 to hold. So basically right here, 1246, you got another little volume shelf here. I mean, this whole area is volume. It's where the most volume was today. So essentially holding this 1246 area and floating through here for probably the next 30 to 40 minutes. Would be the most bullish outcome. We're building a base higher, and we give it one more shot to push higher. That would be the best case scenario for SoundHound. And lastly, with Oscar, like I said, bulls have to push this 1450. They're building a base down here, so it's not bad. Basically the inverse of like what we're looking at with SoundHound right now. If you're a bull on Oscar, you got to go like now. If this doesn't go in same window, really, like 30 minutes, Oscar's going to 13 or lower. So do with that what you will. And lastly, with SPY, currently back at my entry now, $1.65. I'd be patient on this as long as it's not breaking the 200 MA on the 1 minute. The way that the market's sitting right now, especially if IWM breaks that 223.32 level, probably have a decent trade on your hand. If you're in a small account, you could set a stop, obviously. Again, it's right at my entry personally. But you could set a stop. Let's look at the low of this candle, 1025. $1.50. So if you want to set it at like $1.49, you're only risking like it's a $16 drawdown. So it's not the worst thing. And you already made at least, what was that, 15, 16? You already made $17. So even if you get back, so your risk reward exactly is 1-to-1. If you get back to the first take profit point, roughly around $1.82, $1.85, and you have a stop at 149, your risk is exactly 1-to-1, or almost exactly 1-to-1. So either which way, your risk is perfectly balanced. So this is a good, solid trade. You don't have to worry about theta. Expires tomorrow. So depending on how the market sits for the rest of the day, that would be something to keep an eye on. Lastly, let's just double check there's no catalysts. You do have that press briefing at 1. So I would heavily consider being in runners on a SPY play by 1 o'clock in case something is said or happens. With that being said, guys, I think that's going to wrap it up for the stream today. A little bit lower. We only had 56 people today, so everyone's sleeping or they don't like the Thursday streams. I like the Thursday streams. Did you guys like the Thursday streams? I think they're fun because you kind of get like the end of the week thing, especially with OPEX. I thought it would be kind of fun to do that. That way you can kind of have an idea of what to look for, like these special opportunities where the risk reward could be a little bit greater and you could take a little bit of money and turn it into a lot potentially without risking the farm, so to speak, like I said. Because even like I said, with a Joby put, even if you got $15 could turn into about $100 or more, right? Decent risk to reward without, again, betting the house. So things that you can look out for at least throughout the rest of the day. I think we set you up pretty nicely. And with that being said, I will leave you with my outro. Some say you need an extra trade. Well, I like to look at things from a different angle, and that's always what you'll get right here on the Atomcash angle. Have a great rest of your day, guys, and remember, precision beats prediction every damn time. I will see you tomorrow at 9:15. Take care.
The time has passed, and that's a wrap. You're